August 14, 2019. WeWork's parent company, the We Company, filed a 359-page document with the Securities and Exchange Commission that was supposed to raise $3 to $4 billion and launch the most anticipated IPO of the year. Instead, it detonated. The prospectus, the S-1, was meant to be a love letter to investors. What it turned out to be was a confession. And the question that every banker, journalist, and ordinary person found themselves asking within 48 hours was the same: how did a company that lost $1.9 billion in a single year convince the entire world it was worth $47 billion? WeWork started as a simple idea. Adam Neumann, a lanky Israeli-born entrepreneur with a gift for persuasion and an almost physical need to be believed, looked at commercial real estate in 2010 and saw something other people missed. Empty office buildings. Freelancers with nowhere to go. A growing class of workers untethered from traditional employment. He and his co-founder Miguel McKelvey signed a lease on a floor in a building on Grand Street in Soho, subdivided the space, added exposed brick and kombucha on tap, and rented desks to strangers. They called it WeWork. It worked. The energy was real. The demand was real. By 2014, the company had expanded to a dozen cities and was valued at $1.5 billion. SoftBank, the Japanese technology conglomerate run by the famously aggressive Masayoshi Son, took notice. By 2017, Son had met Neumann, and within 12 minutes of touring a WeWork location, according to people in the room, Son committed $4.4 billion. He later told Neumann, and this is a direct quote, that, in a fight, it's better to be crazy. Neumann tattooed that philosophy onto his entire operation. By 2018, WeWork was in 27 countries, signing leases on skyscrapers it couldn't fill, buying companies that had nothing to do with office space, a private school, a wave pool company, a coding bootcamp, and burning through cash at a pace that made even Silicon Valley veterans uncomfortable. Neumann trademarked the word "weak" personally, then sold that trademark back to his own company for $5.9 million. The board let him. Nobody said stop. Nobody said slow down. And then came the decision that changed everything. The decision was to go public. And the document that decision produced, filed on that August morning in 2019, became something rare in the history of American business, a document that destroyed the thing it was designed to protect. Bankers at J.P. Morgan and Goldman Sachs had been working with WeWork for months on the S-1. The company needed the IPO money badly. Its lease obligations stretched to $47 billion, a number that, by itself, should have triggered alarm, and its operating losses were accelerating. In the first 6 months of 2019 alone, WeWork lost $904 million. The plan was to get the prospectus out, build momentum on the roadshow, and let Neumann's extraordinary charisma do the rest. But when the S-1 became public on August 14, journalists and analysts began reading it with care, and what they found inside was extraordinary in the worst way. The document revealed that Neumann had borrowed $380 million against his WeWork stock while simultaneously selling shares, extracting nearly $700 million in cash from a company that had never turned a profit. It revealed that WeWork had paid rent, millions of dollars in rent, to buildings that Neumann personally owned. The company was literally paying its CEO to be its landlord. There was a section of the prospectus introducing a metric called community-adjusted EBITDA, a financial measurement the company had invented specifically to exclude most of its actual costs, producing a profitability figure that existed nowhere in reality. Scott Galloway, the NYU marketing professor, posted a public analysis calling the document the most ridiculous piece of work I have ever seen from a business. The Wall Street Journal's opinion page called it a monument to hubris. These were not fringe voices. And then there was the governance section. Neumann held a class of stock that gave him 20 votes per share compared to 1 vote for ordinary shareholders. He had the right, written into the document, to appoint his own successor. His wife, Rebecca Neumann, held the power to name that successor if Adam died. The We company had a clause allowing it to use the word we. The trademark Adam had sold back to the company for $5.9 million, for a period of time, then lose the right entirely. Investors would be buying into a company that might not even be able to use its own name. The S1 had taken the curtain away. What investors saw underneath was not a technology company. It was a real estate company with a charismatic spokesman and a $47 billion delusion. The fallout was swift and brutal and deeply personal. Within days of the filing, the proposed valuation collapsed. J.P. Morgan, which had championed the deal for years and privately assured Neumann his company was worth $60 billion or more, began cutting its estimates in half. Then again. By September, bankers were whispering the number $10 billion. Then lower. On September 24, 2019, 41 days after the S1 dropped, Adam Neumann resigned as CEO. He didn't leave empty-handed. His exit package, negotiated with SoftBank, included $185 million in consulting fees, the repurchase of his stock at a favorable price, and a loan forgiveness arrangement that brought his total extraction from the company to approximately $1.7 billion. The man who ran WeWork into the ground walked away with nearly $2 billion. The employees did not. On November 21, 2019, WeWork laid off approximately 2,400 people, nearly 20% of its global workforce. Some of them learned about their termination from news articles before receiving any official notice. Many had stock options that were now essentially worthless, having been encouraged for years to believe those options represented real, accumulating wealth. Some had turned down competing offers specifically because of the promise of that equity. Rebecca Neumann, who had publicly positioned herself as a co-architect of the company's culture and had overseen WeWork's private elementary school, which enrolled her own children, shut the school down in October 2019, weeks after the IPO collapsed. The families who had enrolled their children based on a sense of permanence were given little warning and almost no transition time. SoftBank, which had poured approximately $10.65 billion into WeWork across multiple rounds, watched its investment crater. Masayoshi Son, who once called Adam Neumann the next Jack Ma, was forced to write down billions in losses and publicly admit he had made a foolish investment. His Vision Fund, which had been celebrated as the future of global technology investing, never fully recovered its reputation. The unexpected consequence, the one nobody predicted, was what the WeWork collapse did to the entire late-stage startup ecosystem. Suddenly, investors who had been writing checks based on founder vision and market potential, without demanding evidence of a path to profit, began asking harder questions. The valuation of other high-profile and profitable companies was re-examined almost immediately. The era of story over substance had cracked. Not ended. But cracked. The story of WeWork is not really about real estate. It's not even really about fraud, though federal investigators later examined Neumann's conduct, an examination that ultimately did not result in criminal charges, a fact that continues to disturb many of the people who lost their jobs and their equity in the collapse. What the WeWork story reveals is something older and more universal. Human beings are extraordinarily vulnerable to charisma when it arrives inside a coherent narrative. Adam Neumann did not hide what he was doing, not entirely. The trademark sale was in documents. The related party real estate arrangements were disclosed, quietly, to board members. The governance structure, the supercharged voting rights, the enormous personal cash extractions, all of it was, technically, knowable. And yet some of the most sophisticated investors on earth, people whose entire professional purpose is skepticism, chose instead to believe. They believed because Neumann made them feel the future. He made them feel they were the ones who truly understood where the world was going. He spoke about consciousness and energy and community in the same breath as square footage and lease agreements, and instead of asking him to stop, people gave him more money. The S1 was the moment the spell broke. 359 pages that were supposed to tell the world WeWork was worth everything instead proved, line by line, that it was built on belief alone. And belief, when there is nothing beneath it, has a very specific shelf life. Every company that raises money on a story without substance is simply scheduling the exact date that story ends.